Confidence at the end of the day is the true reserve asset of any system, financial, man-made, whatever. Josh, in the past week, we have seen FTX, should we say, mildly shit the bed. There's also questions being raised as to Alameda Research and questions that are also being raised
both
about
of them
Tether.
are going up for like Alameda and FTX are just filed for Chapter 11 bankruptcy. But how is that going to affect the broader crypto market as a whole? Let's go to this is straight from Tether's website. So Alameda and Cumberland received $60.3 billion in Tether across the time period analyzed, equaling to around 55% of all Tether volume ever. And we can see that here. So Alameda and Cumberland in this Tether distribution is, I mean, they were the first and by far the biggest. So Alameda Research is the biggest Tether customer that there is. And this could be very, very bad. Justin, can you show us what Tether is doing right now?
Yeah, absolutely. So right now, I always like to look at the Tether market cap in this regard. So it dipped a little bit, went back up, dipped back down. So I don't know, or my assumption is that there are redemptions being placed against Tether Limited. And to be fair to Tether Limited, I have never heard anything to suggest that Tether Limited has not been meeting redemptions. So again, like, credit where credit's due. If Tether continues to meet, that is Tether Limited continues to meet redemptions, that is to say somebody wants to redeem 100,000 Tethers at a time for 100,000 USD and they can honor it, great. You know, they're doing exactly what they should be doing. I think that, and this is going back to last year where you started to see some redemptions happening, drawing down and drawing down and drawing down. So anyway, Josh, the first thing that comes to mind is, again, you have this reoccurring theme that comes up. It's like the water from Chinatown, if you've ever seen the movie, of a liquidity crisis brewing in the markets, whether it's stock, whether it's bonds, whether it's crypto. And liquidity crisis is just a fancy way of saying there's not enough buyers, or the buyers that exist are demanding so low a price, it's illogical for the sellers. Think back to, let's say, 2008 when you saw the mortgage crisis happen, where arguably you had homes that were sold for too much. And yes, these homes that were sold for too much could still be sold, but they would be sold for such a ridiculously low amount that the losses were material and substantial. Anyways, going back to Tether,
going back to Tether, Alameda accounted for 37% of all outbound volume on Tether. Right now, Alameda just filed for Chapter 11 bankruptcy. If they are holding a significant, it doesn't have to be 37% of that outbound volume, but if I'm sure that they're holding a small portion. Maybe it's just 5 what?
Yes, so hold on a second. So let's go back to that graph, because this is the assumption. So Josh, here's the thing, right? It's not necessarily sus or not necessarily damning that Alameda took such a big chunk of Tethers. If they were, being a venture capitalist and, if they actually had brought in dollars on their own to do that, that doesn't necessarily strike me as a problem. And let me explain why. It's one thing if Alameda raised from private VCs, what was it, 36 billion or whatever, right? And if they took that 36 billion and wired it from their account over a period of time to Tether Limited's account, and assuming Tether Limited still settled the cash or, short-term, T-bills or whatever, right? I would say who cares on that front? This is just business as normal. And honestly, if that was the situation, Alameda was kicking ass in terms of raising cash from VCs. I think the problem that you're going to run into in this regard is that if they weren't sending over cash, because here's the thing, if $36 billion went over from Tether to Alameda, the question you should ask is, did $36 billion of cash go from Alameda back to Tether? And if it didn't, well, what else went back in lieu of the cash? And that's where you start running into the problems, because if they were using a crypto asset, for example, like say it's in over like 50% cash, 50% Bitcoin or whatever, right, in order to issue the Tethers, and then they use the Tethers they got to basically pump the price of Bitcoin. So in other words, it was kind of like a version of what FTX was doing with FTT, I think, even though they were using Bitcoin as the proxy. Like that's going to be problematic. But again, if you go back to, hold on, let me share the screen real quick. As long as Tether continues to honor redemptions, I would say it might be a little jittery. People might be a little nervous, as prudence would, I think, suggest. But as long as Tether honors redemptions, they're doing it right. And what I would say is that if Alameda did send over 36 however much billion, if Cumberland sent over how many billions of dollars or whatever, right, in return for the issuance of USDT, and assuming Tether Limited didn't squander it away, and let's just assume that they haven't, then I would say there's not going to be a problem, because even if there is even if there's a collateral call in the system, fancy way of saying people are going back to Tether, redeeming Tethers for the underlying dollars, Tether should have it. The problem's going to run into is that if Tether doesn't have it, or if Tether accepted other cash equivalents in lieu of actually direct cash as assets to prop up their balance sheet, and if those assets in turn became impaired, that's what Tether's going to run into problems. But again, to the best of my knowledge, I have not heard any stories of Tether's not honoring redemption. And even though I don't feel comfortable investing in it myself, credit where credit's due, at least for
so
right now.
Yeah, so let's just take this to real world banking scenario. And because this is a lot like how banking goes on today. And when Justin at the beginning of the video opened up where confidence is key for everything, that is true for any sort of banking like entity. So a bank today, if you want to transfer these loans, let's just call them tethers. If a bank wants to transfer his dollars or tethers to another bank, you can do a different forms of collateral. You can do a fully collateralized transaction where you could do such you could exchange dollars for treasuries, or you could exchange dollars for bank reserves, or you could exchange dollars for IOUs. And in those IOUs, you could say, well, me and you have been doing business for so long. You own, I mean, I have 33% of all your dollars already on my balance sheet. What's a few more gonna do? So I'm fine. I mean, if you go bust, I already know there's already too much deep for me to get into. So I'll take a few more dollars. And we've been doing business for so long. You're a super genius. I know that everything that you're doing is completely fine. I trust you. You trust me. So we can do this uncollateralized loan or semi-collateralized loan. I'll only make you put up 50% dollars, 50%. You can do whatever asset you want. I mean, it may be that FTX that you potentially just minted out the earth, but we're not going to talk about that right now. We'll settle when we need to settle, because I'm sure that day will come, but that day is not today.
Yeah, and just on it too, like if you're using, what makes Tether different is that the collateral they say are dollars, not euros, not another crypto, but dollars. That's where it comes from.
And I mean, fair point to Tether. They've been buying a ton of treasuries. They've been buying a bunch. That's going to be $1-to-1 dollars. The problem arises is if they do not have all of those dollar denominated assets as they say that they do, and people start to redeem. And if Alameda starts to, if they already have a bunch of tethers on their book and they're going into chapter 11 and they have to sell those, let's just say they're not holding that 37% of all tethers ever issued. Let's say they're holding a very small percentage. Let's just say they're only holding 1% left. 1% of Tether's market cap getting wiped off is still a pretty substantial move, and it could bring a psychological impact for saying, geez, that someone's dumping a lot of tethers right now. Maybe I should be a prudent investor and dump some of mine too. And that's where we have this psychological impact that Justin was talking about, where tether could be completely fine, but it goes on this big bank run, and then all those issues just come into an even bigger problem.
Yeah. Let me say this a slightly different way. If Alameda actually sent over the $36 billion back, let's just say Alameda has on the balance sheet, so let's say they still have $36 billion of tethers, just a thought experiment. And if Alameda actually sent over $36 billion of cash, to Tether, sitting in a Tether bank account somewhere, banks, whatever, right? Assuming Tether was prudent, hadn't lost it or squandered it away or whatever, right? If Alameda had to liquidate their USDT position to get cash, they could easily do so. Why? Because there is $1 backing up one tether. That 36 billion of cash they sent over initially, they say, hey, we need it back, and to get it back, we're going to return your tethers. The problem is going to run into, or this is where things are going to get dicey, is that if they send over a portion in cash and a portion in other assets, think like Bitcoin, and if the value of the Bitcoins become impaired, then even if today, let's say they push the sell button and they could sell, let's say half was collateralized with Bitcoin. That means that let's say 17 billion would have been the value of Bitcoin at the time it got sent over. But if it got sent over, let's say Bitcoin, again, numbers on my back, so I would say 20,000. And then all of a sudden Bitcoin's dipped to 15,000. They're underwater right now. And they couldn't necessarily honor the entire redemption. So in my fictional example, they would still have, the 17 billion in cash that came over, and the 17 billion is the approximate value of Bitcoin when it went over. But if the Bitcoin value has dropped, there's now a hole in the balance sheet.
And so then what happens? They have to sell the Bitcoin, driving Bitcoin even lower.
Yeah.
Then they have to continue to sell Bitcoin, and they're gonna have to sell more of the Bitcoin to get more dollars, and that has that positive feedback loop. It's very similar to how the banking system works. I mean, it's pretty much identical. The only issue is these banks have been doing this for a lot longer. They know what they can get away with, and they know that they'll probably get bailed out if they do get screwed. And all these banks are so intertwined. The crypto market's so new, and it got so leveraged in such a short amount of time. Leverage is really what will kill you. And the fact that this, like a hedge fund like this they said, I saw some tweet that they said they have somewhere between 5 to like 70 or 50 billion dollars somewhere that that they can't really locate. And then like how, I mean, I don't know about you, Justin, but if I had like 10 to 50 billion dollars that I couldn't locate, if I was a prudent investor or bank or hedge fund for that matter, I would be pretty concerned of that.
I can tell you,
where is it?
I can tell you exactly how to locate it. You fire up the general journal and you debit losses from trading operations, and you would probably credit something like retained earnings, sending it grossly negative. But
So,
anyways,
yeah, so let's just go into some bigger side effects here. Even if Tether does not have any immediate issues, Alameda is not one of these Tether or one of these Lunas or these small cryptos that have gone bust. This is a pretty big deal. That they're one of the biggest exchanges out there, and to think that there's going to be no other firm that goes underwater because of a move like this, or it's going to tighten up more balance sheets, therefore it's going to prevent more of these other crypto hedge funds or exchanges from being any more risky. And all it takes is a few of these exchanges to tighten up their books to have all of these over leveraged people go bust. And we talk a lot about this with different stocks where something like this could potentially happen if banks no longer can expand the side of their balance sheet. You have to look at this from the same angle in crypto, because this could have catastrophic events everywhere, not just across crypto. Because if crypto goes from, let's say Bitcoin goes from 20,000 to 3,000, the stock market's not going to stay flat. It's going to be going right down with it, because leverage is everywhere.
Yeah. So 2 more comments on that front. When crypto had its issue, when did 3 Arrows Capital blow up? That was like Marchish of this year, March, April, like late Q1, early Q2, right? Thereabouts. If that actually was the first domino to fall, I wonder if what we're seeing right now at Alameda and FTX is related to that initial fallout. I wonder if that was the case.
Yeah, I'm sure there's not zero correlation or not 100% correlation, but these things all have this trickle round of effect, because when times are good, these crypto firms can just continue to leverage up because there's no issues. Everybody will expand this venture capital debt. Everyone wants to, but times are no longer good, and people, when they get with the times and they stop expanding their balance sheet, those firms who feasibly cannot survive without expanding their balance sheet are going to go under. And we're seeing that going around. It's no longer just these oddball places. Now it's starting to centralize in a lot bigger areas. If this gets out of the crypto realm and into the real world, let's say in some of these foreign entities, if like a foreign big hedge fund that's not, we're dealing with 50 billion but $500 billion goes down, we're going to start to see a lot of mayhem. And that this is off the backdrop when the market over the past 2 days is up like a few thousand points, having the biggest days ever. So this is one of the most interesting times in the financial sector in the past few months for sure. So you guys are going to have to keep your eye on it.
Yes, lastly, I would note that in terms of the banking system and crypto, I think that will follow each other, but I think crypto will lead the banking system, because things that happen in crypto will happen much quicker due to the lack of regulation and the other friction that you'll see going through in that regard. So